Good evening, ladies and gentlemen. Thank you for joining us again this evening for another episode where we talk about some important issues around going on around that people are facing day to day. I want to thank all our viewers on YouTube, Facebook, Instagram. I think we're live across all those platforms this evening. And we've got a very important topic this evening that I am really glad we're having this conversation. It's a conversation that I've always wanted to have, but we were looking for the right person to bring the topic and who could do justice to the topic. And I'm glad that our guest today is an authority on the subject. So just before I bring the guest on and I introduce our guest for this evening, share this link, share it with your friends, share it with people you know are interested in anything to do with cryptocurrency. Tell them we've got an expert in the house on the subject matter. It's going to be an amazing evening as we talk to our guests. So please do that. Share the links. I think, like I said, I think we're live across all the platforms. Our guest this evening is Dr. Iwa Salami, and she's a senior lecturer in financial law and regulation at the Royal Dutch School of Business and Law. Now, she is and has been published extensively. She's also written a book on this subject. You know, her list of publications include a book and numerous articles that have been peer reviewed in journals. She has a book, Financial Regulation in Africa, an assessment of financial integration arrangements in African emerging and frontier markets. That was published in 2012. She has a recent publication, Decentralized Finance, a holistic approach to regulating the crypto industry. That was published in July 2020. I'm going to be talking to her about that very important subject. Um, Look, she's, for me, she's like right there at the top on the subject matter. And without wasting much time, I want to welcome Dr. Iwa Salami to the program this evening. Doctor, thank you so much for joining us this evening.
It's an absolute pleasure to be here with you, Akin.
Thank you so much. Now, we're just going to dive right into this topic. I know we've got a short amount of time this evening. Um, But we want to tackle this subject of cryptocurrency right from the basics. From the person who may say, I've been hearing about this thing, there is a lot being said about it. What exactly is it? What does it mean? Help us out. What are cryptocurrencies?
Okay, so cryptocurrencies are a digital representation of value, and they're powered by digital ledger technology. And that digital ledger technology, an example of it is blockchain. And so the idea is that they used the technology facilitates a peer-to-peer transfer of these digital representations of value in a way that the parties that are transacting in them in this peer-to-peer manner don't have to use or can do so without using intermediaries such as banks. Another characteristic of cryptocurrencies is that they're not centrally administered by any body or institutions such as a central bank or central banks. They're distributed open source, which basically means anybody that's connected to the network that facilitates this peer-to-peer type of transaction can actually participate in it. The idea around them initially was that they would be deemed or used, if you like, as a certain type of internet money. Okay, that people that transact virtually will be able to use them to pay for goods and services. Unfortunately, it hasn't particularly ticked all the boxes of what constitutes money. And I'm sure that we'll probably be getting into what it's ticked and what it hasn't ticked as we progress in this interview.
Now, one thing that a lot of people have talked about, and for me, when we talk about cryptocurrency, what comes to mind for me is Bitcoin. But then I think it's gone a bit wider than just Bitcoin. And we're starting to see a lot of other things evolving in this class of assets. Can you talk about how this has grown over time before we start to look at the regulations surrounding it?
Okay, so that's a brilliant question. So Bitcoin was launched in 2009. And you're right in saying that quite a number of things or quite a number of digital assets have evolved. So the area is very interesting because even in terms of sort of definitions, i.e., what is what, in terms of the various types of assets that have evolved, if you like, from Bitcoin since it was launched in 2009, that doesn't exist. So that we say a taxonomy of definitions or classifications of digital assets that have evolved. It's still not settled. Okay. So since the launch of Bitcoin, we've had various other types of asset classes. So we've had what is known as initial coin offerings, which tried to mimic, if you like, initial public offerings, where people who are promoting a certain idea or project can get people interested in investing in those types of projects. And they could invest in those types of projects using, if you like, traditional crypto assets or cryptocurrencies as we know them, such as Bitcoin and Ethereum, or also do so using fiat currency. That's our own type of traditional currency. So that would be the US dollar, pound sterling, euro, and the like. The idea around that was that people would be able to participate in this initial coin offering, which is also known as by its acronym, initial coin offering, if they see that the project that's being promoted has a potential to grow and has a potential to generate good returns for them. Now that that existed shortly after, I'd say, the launch of Bitcoin, but then has been attributed with a lot of fraud. Okay, and so government sort of stepped in to want to regulate that. Okay, so there's a lot of regulation around ICOs as they are because they lend themselves to a lot of fraudulent activity. Now, in the same breath, while we were sort of, thinking of ICOs as an opportunity to sort of raise funds for particularly small businesses that can't sort of access finance through your traditional initial public offering IPOs. We began also to see things like the suggestions by private institutions of what is known as stable coins. And so we began to sort of see things like ideas around projects like Facebook's Libra, which is now known as sort of, well, which Facebook has coined as DM. And the idea around that really was to use Facebook to be able to leverage its clientele, if you like, on Facebook, its huge clientele on Facebook, to be able to use that as a medium to facilitate sort of this Libra or DM currency that it was seeking to introduce. Obviously, that fell foul amongst regulators, particularly the regulators in the United States. And then fast forward, we after Facebook introduced its DM, obviously central banks across the world, particularly driven or led, really, I'd say, by China, the People's Bank of China, came up with the idea of introducing their own central bank digital currencies. And so we've had that again brewing on the background, and so many countries, I think over 60 countries now, are actually contemplating on issuing this currency, or at least trying to investigate what that would mean for them if they decide to go down that line. And then as we progress, again, there's another market that's hugely sort of developing. We've got decentralized finance, which again is sort of, building upon all of these activities, but actually taking things slightly deeper, as of course it seeks to sort, if you like, replace or disrupt traditional financial services.
Let me ask you this question, Doc. When some analysts have said to us over the last sort of since March last year, Bitcoin specifically has grown phenomenally. Are we starting to see a situation where um, both investors and just everyday users are starting to be more confident with trading in this new currency that we have out there? Because this growth is phenomenal, what we've seen over the last sort of few years. What's your take on that?
Okay, so there's a history on that, and I'll try to answer your question directly, and that may preempt other questions so that I don't carry on talking. So of late, I'd say I'll track things from the start of the pandemic. Okay, so or I'll just give an overview if you like before the pandemic. So Bitcoin initially was deemed as some sort of, I'll say some sort of toy that young tech savvy teenagers were interested in sort of playing around with. But then interests, if you like, became very strong when it began to emerge that it was used to facilitate, illicit activities and payments for illegal activities on the dark web. And then fast forward, we began to see huge interests, okay, amongst investors, okay, somewhere along 2015, 16. And when people began to sort of look at it as some sort of potential, right? As there being a certain type of potential in the technology, I think the interests sort of grew, and that sort of affected the prices, and the price, well, maybe affected in a positive way, the prices sort of grew. But fast forward to the pandemic. So Bitcoin has had issues. Let's just put it that way. It's had issues with wild fluctuations, people investing in it and finding that the amount that they've invested, they've lost, and the like. And so it's had negative, if you like, negative reactions amongst, retail investors. That's people like you and I, people that are not really well versed in it. So typical example was in January 2017. Bitcoin was about $1,000. Okay, $1,000, the value of one. Right at the end of that year, it was headed towards $20,000, 20K from one. And so at that point, people, as a result of the fact that investors, people like you and I particularly, didn't want to miss out on this type of investment, considering the promises that they are affording in terms of good returns. The fear of missing out, we like to call that. People began to sort of invest, and people were using all sorts of money, all sorts of whatever they could lay their hands on to invest in it. Fast forward to March 2018, right? Regulators began, obviously, January, February, regulators began to take much more interest in this asset class because it was becoming an asset class now in itself. And by March, again, the value had dropped significantly to 3K, from 20K in December to 3K in March. So, of course, people got very scared. People got very institutional investors. And again, institutional investors, people that don't really know about this type of asset class. And at that point, some people felt this was the end of it for them. This is just not a place to be, right? So fast forward, and between March of 2018 to round about actually round about January last year, the value fluctuated between that $3,000 to about $9,000, $10,000, and then there was a bit of a dip. There was a bit of a dip in the value of the currency when the stock market crashed around about March, April, May, during the pandemic, and then Bitcoin and other crypto assets had a life of their own, began to sort of in value again, and the value from, I would say, around about May till now has just been on a peak. So it's just been on an increase. I have to say that this asset class is very volatile, right? And there's a lot of criticism as to why this is happening. Okay, as to why this is happening. Um, Sorry, Akin, I was wondering, can you still see me? Because I seem to have
Yep,
lost you on the.
I'm here.
You can still see me. Okay, all right.
Absolutely. Please continue.
All right. So I can't see you at all. So it's a bit.
Don't worry. Go ahead.
It's okay. All right. Okay, I can see you now.
Go ahead.
so so there've been a lot of criticism and a lot of questioning, if you like, as to the intrinsic value of this asset class. And it's one that anybody who wants to invest in it has to really pay attention to.
Mm,
So unlike stocks and bonds, where you get something off. So stocks, you get dividends, bonds, you get coupon interest, real estate, you could get rent, even gold, commodity, you could get, value of it, you could get jewelry that people could, buy and sell. With Bitcoin, for example, there isn't really any intrinsic value per se. So the fear really is that it's driven by speculation. So it's basically driven by the amount people are willing to pay for it. But then the flip side of the argument again is that some other people would argue, well, what's the value of the dollar? What's the value of the pounds? Well, someone like me would say, well, the value of the dollar and the value of the pounds is that they have the backing of the Bank of England and the Federal Reserve Bank.
yeah.
They have the value, they have the government backing them. Whereas Bitcoin seems to be driven by speculation, and not just only speculation, also by the types of individuals that own huge amounts of it, who we call whales. Okay, and they really can affect the value of the price depending on how they're feeling. So if you have a big whale, for example, such as Elon Musk, who's recently invested 1.5 billion in it, if he decides to drop his 1.5 billion, the price is likely to go down.
Mm,
And that's because there isn't really any intrinsic value per se in it. And I know the technical people that and the libertarians that are behind it would really dispute that. Some will say, oh, the value is in the hash, and the value is in things that are not. Somebody has said to me, knots and zeros, really, knots and ones.
mm,
Okay, so that's the big question around it. It almost feels like the value today can be 45K in dollar terms and can be zero tomorrow. Who is to tell?
mm.
Who is to
But
tell?
that intrinsic risk, doesn't that exist in some of these other currencies that we have out there? Yes, I understand that where it's backed by the central bank or something like that, maybe you have schemes from the government to protect your investment. I know the UK, for example, has a scheme that protects deposits up to about £75,000 or something like that. When it comes to things like Bitcoin, is there anything like that in these cryptocurrencies where the government is saying, well, we will provide some form of protection against these dips that you talk about? Is there any such thing?
So the governments haven't come out, in fact, will not do that. And this is the question, because Bitcoin is not administered by a central it is not administered by any central organization, any central body. There's nobody responsible for it. The governments aren't responsible for it. It's not legal tender. It's not national currency. So no government really should be responsible for it. And which is the reason why governments have advised that if you're investing in this asset class, you're doing so at your own risk. Okay, you're
Mm,
doing so at your own risk. I have to say there are aspects of regulation, and there has been significant progress in the regulation of it. Um, and one of the significant approaches to regulation has been to regulate it from um, the connection it has, or the connectedness, or if you like, the intersection with this virtual currency with our real world currency, fiat currency. And
mhm,
that's being done through the regulation of cryptocurrency exchanges, or what is also known as virtual asset service providers. They could be cryptocurrency exchanges or wallet providers who actually are centralized, okay, centralized institutions that facilitate the trading of these currencies with each other, or the trading of these currencies with fiat currencies. So people can
Mm.
actually buy cryptocurrencies through these exchanges, and those exchanges are regulated. Okay, so they are
Okay.
regulated from the perspective of, they're expected to know who they're transacting with, who their clients are coming on board, um, just to be on top of anti-money laundering and countering terrorism financing regulations. So from that perspective, yes, from the perspective of somebody being responsible, if I lose money or you lose money, you're very much on your own,
Okay. So
unfortunately, on that.
say I have £10,000 and I say I want to invest £10,000 in some kind of cryptocurrency. If I lose that £10,000, there is really nobody to hold to say, hey, I lost my £10,000. Where is a guarantee or something of that nature? Nothing like that?
Absolutely nothing like that. And I'm not anyone's financial advisor. I have to sort of put that there. But people would usually be advised to invest, particularly with this type of asset class. People would usually be advised to invest what they can afford to lose,
Hmm.
because the value. I mean, since Bitcoin was launched in 2009, and I say Bitcoin as a as a representative of the other altcoins. So if you're not Bitcoin,
Absolutely.
you're an altcoin. Bitcoin, of course, is the king of them all. Um, so there isn't any protection if you invest £10,000 today, and the value, and the value depreciates to, I mean, as at the last time I checked, I think it was 40, 45. I haven't checked today. It's 45K. I mean, some people are predicting that is going to go up to 100K, and it's useful. It would be useful and serve as a store of value,
Hmm.
which really ideally should be one of the characteristics of money, right? Um, I mean, people are calling it digital gold, and therefore this should be something people should want to invest in. But there's no guarantee that, if you invest in it, you're going to be getting. So if you invest your ten
Hmm.
thousand pounds in it today, there's no guarantee that you get your £10,000. For all you know, you could get. I mean, in the next what? In the next maybe 2 3 years, you could get 50, 60, 70,000 off that next 2 to 3 years, or you could get
Yeah,
nothing actually off it.
absolutely. All right, let me move the conversation a little bit more towards actually a point you had touched on slightly, and that is what organizations like Facebook tried to do. They got a bit of pushback from the government. Um, Now you start to move this into the what you professionals call the frontier markets, and you start to look at this. Is there any opportunity for other African countries, for example, to come up with their own version of this kind of crypto asset and say, hey, we as Africans now want to trade in let's say Africoin, just put something out there. We want to trade in our Africoin across Africa. And that's what we're going to back. It's not going to be pegged to the dollar, or it's not going to be pegged to gold or anything. How would that work in principle if you wanted to do something like that? Because I do hear a lot of people saying, why do we follow the West in implementing this kind of solutions? What's your take on that?
Okay, so that's a very good question, right? Okay, so I've spoken a bit about, the parts of Bitcoin that are slightly, problematic, but again, the idea around it, I mean, it's not all bad for Bitcoin, to be honest. It's not all bad for the positives. So there are positives around it, like people can transact on a peer-to-peer basis. People can, to a certain extent now, at least transact privately if they don't want people to know what they're doing. So there are those types of things. But I'd say one of the positives that emerging economies, frontier markets, developing countries can really benefit from, such as countries in Africa, is thinking of ways to actually use this technology to facilitate financial inclusion. And what is financial inclusion? Financial inclusion is basically a situation where you have people that cannot access formal or traditional financial services, either because they don't have enough money, they can't fulfill the requirements. It's very difficult to open a bank account because they don't have maybe the necessary documentation. They don't have just access. They don't have work. They don't have access to sort of open accounts like that. One of the things that this technology has introduced is that it's actually possible to transact on a peer-to-peer basis. So central banks across the world, for example, like I said earlier in my introduction, are looking at introducing what is known as a central bank digital currency, or what is also known as its acronym, CBDCs. Now, obviously, this is what they're exploring. One of the big things about this is that for people that can access traditional financial services, such as banks, these types of central bank digital currencies can provide wallets for any and every individual. And these wallets can be accessed, freely. Everyone can have a central bank digital currency wallet, right? Just easily. And that includes so many people that would have been excluded from traditional financial services, either because they don't have work or they can't fulfill their identity. They can't they can't sort of get take the boxes that they need to tick in order to be able to open an account and the like. So in terms of financial inclusion, this, one of the things that have the positives, if you like, that has resulted from these innovations, particularly starting from Bitcoin, looking at the developments and seeing ICOs and private digital currencies, and now CBDCs. This is certainly a positive. In fact, I've written a paper that, looks at how for a long time, for example, on the African continent, we've tried to achieve monetary unions in certain regions. So we have, for example, the two main ones we have are the Francophone West African Monetary Union, okay, and then we've got also the Central and Eastern African Monetary Union. But for a long time, we've tried to have monetary unions in other parts. So we've tried to have, for example, a monetary union across ECOWAS. That hasn't really happened for a number of reasons. And so in the paper that I wrote, that sort of looked at, is there a possibility that through the digital ledger technology, through blockchain, this can happen? And this is worth sort of considering, because if we're looking at the African Continental Free Trade Agreement, one of the characteristics of integration agreements on the African continent is that the inconvertibility, if you like, of currency, has really hampered intra-regional trade. So if we can come up with what you're suggesting as some sort of African coin, right, that can be used across the African continent, this can certainly and surely facilitate, on the broader level now, facilitates intra-African trade, which of course would be in the benefits of all of us. Okay.
One question to put to you here is the issue of fraud. You're talking about peer-to-peer trading and those sorts of things. Now, if I were to um, if I was trading with someone in Zimbabwe, for example, on this, surely there would be regulations to a degree that kind of means that I have confidence that somebody out there is not just going to take what I give to them and run away. And you wrote a paper where the financial crime update, where you talk about decentralized finance, the benefits of decentralized finance. Do you want to talk to us a little bit about that? Because somebody out there may be saying, okay, I get there are risks, But I know that there are risks with other areas as well. But when it comes to this crime area, what is there? What sort of mechanisms are there to at least limit the exposure? And I think your paper tried to look at that.
Okay, so decentralized finance is a totally different kettle of fish, I'd say, to be honest, right? Because I'll try to simplify it so that it's not very technical. Okay, so we have centralized exchanges that are regulated. Okay, you have centralized exchanges that are regulated, the sorts of ones that I spoke about. So I sort of said if somebody wanted to buy Bitcoin, for example, or Ethereum, or all the other types, you can purchase these using centralized exchanges. They are regulated. Okay.
Okay.
There's a lot of regulation around them now, right? And even the FCA here in the United Kingdom, had given a deadline um, for January 2021 that if you hadn't been fully licensed by that time, you would actually be illegal, conducting an illegal business. So they are regulated. But then you have transactions that are happening on decentralized platforms that are not at the moment regulated at all. I mean, it was only on Friday, I think it was Friday last week, that the Financial Actions Task Force, which is the international global standard, the global standard setter, or the watchdog, if you like, for terrorism financing and money laundering, right? It was only last week, Friday, that they came up with guidelines, right, on virtual assets, but now extending that to decentralized financing type activities. So if I just explain decentralized financing type activities, now decentralized finance in itself is really trying to take what exists traditionally in our financial services, so things like lending, borrowing, investing, and also even now insurance, right? Transferring those types of transactions onto, if you like, the virtual space, right? But giving people the opportunity to actually transact on a peer-to-peer basis without intermediaries. And the way that they're able to do this is using smart contracts, right? The smart contracts facilitates these peer-to-peer transactions. People are able to lend, people are able to borrow, people are able to invest, but all using crypto assets or cryptocurrencies, not fiat currencies. Although we have what are known as stable coins that are really, we call them stable coins because we say they're sort of convertible to fiat directly, right? Those can also be used to transact on those types of platforms. Okay, so the those activities, so the lending, investing, borrowing, the activities that happen on those platforms are not regulated at all. It's only on Friday that this international body has come out to sort of say they'd setting up guidelines for countries to fulfill, and the responsibilities they have towards looking after or keeping an eye on those types of transactions and those types of activities happening on those platforms. So decentralized finance it's an interesting area because regulation isn't doesn't exist as yet, but we're on the way there. And the problem with that is that when we have problems on centralized platforms that are regulated, right? So those centralized platforms, although I didn't mention earlier, have also been subject to hacks. So if you're kind of interested in cryptocurrencies, you would have heard that there have been a wide and long history of hacks of exchanges, cryptocurrency exchanges. And one of the things that we're observing now is when those exchanges are hacked, the monies that are, or the cryptocurrencies that are hacked are then transferred now to decentralized platforms. And
Wow.
they're able to do so with actually transferred or laundered, if you like, to those decentralized platforms, just because those platforms don't have any responsibilities to fulfill KYC requirements. Or KYC is know your customer requirements, for example. So people transact there on a peer-to-peer basis without having to declare who they are, and the like. So there's just all of that
But
going on
Doc,
in that
let me
space.
ask a question here. Let me throw something here. So I'm just thinking about this. I go to eBay, for example. Somebody says they want to sell something on eBay. I don't kind of think that maybe that person isn't going to deliver the goods. I just assume that they will deliver the goods. And that if they don't deliver the goods, what do I do? Okay, well, I didn't know until recently that debit card transactions are not covered when it comes to certain fraud cases, but credit card transactions would be covered. As somebody dealing with, you've said it's not regulated, and we get that. But what sort of recourse do I have if something goes wrong? Who do I go to? Police
So
or
you
who?
so this is a very good question that you're asking, Akin, because um, a lot of people don't understand this asset class, right? And I get people asking me every day, oh, what should I do? What should I do? Shall I? I've got this amount of money. Shall I invest in it? Oh, Iwa, I've got this amount of money. Shall I invest in it? Oh, have you invested in it? Are you going to, and things like that. The truth of the matter is, you will, as far as the laws across the world, I don't know of any country that would say they would give you an equivalent of a national deposit insurance scheme, as you were talking about earlier. If you lose your money, nobody's going to give you a 10%, 5%, or 1% of any monies that you invest in this way in Bitcoin. You spoke about eBay. eBay is interesting because it's a centralized organization, right? So if you want to open an account in eBay as a buyer or a seller, you have to kind of register yourself. There are certain rules and regs that you would have to sort of comply with. And if you don't fulfill them, I'm sure your account can be closed or suspended. So there's a bit of a standard as to what is expected there. And people who want to always use that as a platform have that incentive to do what they're required to do in terms of sort of selling. um, Very different from your totally decentralized, platform, right? So totally decentralized platform where you have no central administrating body. Now, I have to say that there are no central administrating body, and the proponents of Bitcoin, and I have to say that I have had all sorts of attacks in the past for, canvassing and calling for regulation of the industry. The proponents would like to say that it's decentralized, right? But there's some heavyweight arguments actually against the extent of the decentralization. Okay, the extent of the decentralization, and the reason why I'm saying this is because the promoters of Bitcoin really wanted it to come alive, particularly after the financial crisis that people saw as being, as financial institutions, investment banks being quite exploitative and greedy, taking people's monies, and at the end of the day, being bailed out by taxpayers and governments. So people thought actually a peer-to-peer mechanism to transact would be the way out of all of this, right? And people, the proponents have sort of said, well, it's decentralized, anybody can get involved in it, without necessarily without having any central banks or any banks interfering. But then people have also criticized the fact that, the centralization, the decentralization of it can also be called into question, because the way that new currencies are generated, or the way that new, for example, Bitcoins are generated, they're generated through what is called a mining process, right? And it's a lot of these mining activities are now based in countries like, Russia, China, and happen amongst a very, if you like, closed class of groups. Of organizations. And so there's an argument that, I mean, if the predominantly people and the institutions that are mining these currencies are based in very limited jurisdictions and are, in themselves limited, then how centralized, how decentralized is
Mm.
it really? Okay. So yeah, I mean, these are quite interesting, quite interesting sort of developments. And one of the things I have to really say is that there are, you know, we still have to say the future will tell us. The future will tell us how the positives, and financial inclusion here, fared, if you like, since the launch of Bitcoin.
So let me put this question to you here. Again, still staying with some of the African companies of recent. We've started to see quite a lot of investment going into Africa, into fintech companies, and even in the UK, we've seen quite a lot of investment in this area. There was a report I was looking at a while ago that suggested, I think, the top 15, top 30 companies. Of the top 30, 15 or so of them were either fintech, martech companies, and these companies are experiencing phenomenal growth. You look at Africa, you're starting to see funding going into Africa to push development. Now, some have argued that such push of funds from the West into Africa is yet another way of weakening the position of Africa in bringing up their own equivalent. I mean, if a Facebook can decide, I want to create my own currency so people can trade, surely other countries can come up with that. But what is your stand on Africa? Where do you see Africa going with this, with all this investment coming into Africa? Is it an open door, or are we giving away our rights to be able to create our own?
Okay, so speaking generally, and this is just slightly moving away from cryptocurrencies now, you're very right in saying there's a lot of, investments, both from venture capital into fintech startup firms, I'll say actually in
Yeah.
Africa. So we've seen the likes of, Flutterwave, Paystack, and also there's a recent one happening also in Kenya, actually, where World Remit actually bought up a fintech startup, which was really phenomenal. Okay, so their investments going in this way, and this speaks, if you like, speaks to the heart of the young population.
Mhm.
Okay, in most African countries. This is brilliant because in the pandemic, we realized whilst other industries were sort of going down and the economy suffered and shrunk, i.e., African economies, we found that in the fintech space, yes, there been a slight slowdown in investment in venture capitals going into startups, but we've still seen we've still seen an interest in investing in that space even during the pandemic. So there's huge opportunities here for particularly young Africans with innovative ideas, tech savvy young Africans, and they're huge numbers, right? What is needed though is to have the right policies, the right regulation, right, in these African countries that can really facilitate innovation rather than stifling innovation. So there are some aspects of financial innovation, okay, that needs careful regulation. Okay, so aspects of financial technology such as the cryptocurrencies we looked at that need regulation against money laundering, terrorism financing, and all other types of criminal activities. But then there are also fantastic developments that are happening, like you mentioned, and what we what regulators need to do is to be able to strike a balance,
Mhm.
okay, to strike a good balance, in a way that this financial technology, particularly what we've seen happening in the payment space, where we're seeing small businesses, and individuals being financially included, and therefore sort of getting on board with or through their activities promoting further economic activities. And then that way, sort of, we're achieving inclusive growth as countries in Africa and as even as a continent. But the idea really is for regulators, to take the right approach to regulation. And what's the right approach? The right approach is basically trying to strike a good balance that doesn't stifle this innovation, but a balance that facilitates innovation, right? A balance that facilitates innovation, but not at the expense of, you know, not at the expense of financial stability, not at the expense of investor protection, and those things that we're concerned about. Now, going back to the point that you made about Facebook, just giving it a certain twist and why regulators should sort of come in. That's certain times, okay? Certain times, and I'll use Kenya here as an example. So most of us
Mhm.
are very well versed about M-Pesa in Kenya and the enormous benefits that that introduction of that mobile financial service has done in facilitating financial inclusion for the common Kenyan man and woman, right? That was predominantly achieved because the Central Bank of Kenya didn't stand in the way, right? The Central Bank of Kenya didn't stand in the way, and I know there are all sorts of stories around why they went, why they didn't, and the like. But the thing really is that regulators should be able to strike a good balance between stifling innovation, right, and protecting financial stability and investor protection, right? And I think where regulators, and particularly African regulators, should also come in and pay particular attention to is all the other activities happening, if you like, on the horizon. So, for example, when Facebook introduced its Libra, is now called Diem, when they introduced the Libra, looking at the way Libra was going to function, for example, very quickly the Americans, the Europeans, and a few other jurisdictions and regions of the world knew that if this currency was granted permission, right, if this Libra digital currency was granted permission to exist or to launch, it was going to have monetary policy and monetary stability consequences. Because, of course, if people are going to be using a currency much more than a domestic or national currency, what that would mean is that the central bank or the monetary authority of a country would be very restricted in the way that they can, if you like, control economic activity or control the economy, right? So they would lose the tool to be able to, you know, facilitate or control the economy in a way that is in line with the economic development or economic growth agenda for a country. So whilst countries in Europe and the United States were very quick to put a stop, right, to that project, a lot of African economies who have huge amounts of Facebook users, for example, because of course this
Yeah.
currency was going to be able to function, how that currency was going to be able to work, i.e., this Libra digital currency, how it was going to work was that people were going to be able to transact using it on Facebook. People were going to be able to send themselves Libra, now called Yen, through Facebook accounts, Instagram, and WhatsApp, right? Which and a lot of Africans transact on those platforms, as in
Yeah.
a lot of us are on Facebook. It would be
Yeah.
easy for us to just be using Libra or DM, whatever it's called now, to transact. And very quickly, that can be a type of currency that people are transacting with rather than. So, once the advanced markets came out to put a stop to this, nothing was really coming out from the African side of things.
Mm.
Nothing was coming out from the African side of things.
A question here for you, Doctor, and that is, let's look at Nigeria specifically. There was news that came out at one point that the Nigerian central bank had banned cryptocurrency, but then just last week, news came out again to say we never banned cryptocurrency. What is the challenge of using these currencies in a country like Nigeria? And how do we address those issues in a country like Nigeria?
Okay. So I have to just to clarify actually. So the reason why people said that the central bank banned, and banned is an extreme word because, of course, ban is sort of saying you can't use it to
Yeah.
function. The reason why people sort of said what the central bank statement tantamounts to is banning is because the central bank basically said that banks should no longer lend to cryptocurrency firms. Now, for those cryptocurrency firms and exchanges, I mean, that tantamounts to banning them from transacting. Okay, so
Absolutely.
that's why people sort of said that's banning. Right. Now, the policy and the stance that the Central Bank of Nigeria has taken on this has been very inconsistent. So, somewhere around 2016-17, when things began to get very hot around sort of Bitcoin and cryptocurrencies, the central bank came out with a few statements saying that people transacting in cryptocurrencies should be very careful because if they do so, they're doing so at their own loss. Fantastic, position to take so that people are aware of the risk. And I have to say that there have been quite a few people that have been scammed through cryptocurrencies in Nigeria, Kenya, South Africa, and across Africa, actually. So that was a good stance to take. And then shortly after, the central bank came out again in a circular saying that the Central Bank of Nigeria here saying that banks should not themselves transact or trade in cryptocurrencies, right? But they were able to have clients who transacted in them. So they were able to sort of, have clients such as cryptocurrency firms, transacting in them, okay, trading in them. Only that they had to be sure that their clients transacting and trading in them fulfilled KYC requirements, i.e., know your customer requirements. Basically, that they had to be sure that those clients that they had transacting in them were clients complying with certain types of standards, right? And that if they felt those clients weren't complying with those standards, they should desist from transacting with them, right? And that was okay because upon that basis, some quite legitimate, I'd say, cryptocurrency firms, came about, and had been transacting, and all was good, and quite a few that are transacting within the space until the statement that was made on the 5th of Feb came out, sort of banning, actually, if you like, stopping banks from financing these cryptocurrency exchanges, which really tantamounts to banning them from functioning, to be honest, because by the time you take the lifeblood of the financing, take their accounts, remove their accounts, how are they going to function? How are they going to transact, right? So the policy has been quite inconsistent. And on top of that, actually, the Securities and Exchange Commission that had put itself out there and saying that yes, crypto assets, cryptocurrencies were under their remit because they exhibited characteristics that functioned as assets, right? And therefore were going to be regulated, and also had plans to introduce what is known as a regulatory sandbox for companies that were interested in either issuing these types of currencies or transacting in it. Then backtracked, if you like, after the central bank had issued this statement and sort of saying that those companies that were maybe planning to sort of issue um, uh, or transact sort of in the space will now not be able to do so
Mm.
until we now not be able to do so except they have bank accounts, which is basically sort of, if you like, reversing the trend of progress one could have said was being occurring, if you like, in this. It's unfortunate, really, because I mean, this industry. I mean, I was reading some stats today on it, and the stats coming out actually indicate that, right, the youthful tech savvy population in Nigeria, for example, have traded over 60,000 bitcoins, right? And which have been valued for
Wow.
500, valued to the tune of $500 million in the past
Wow.
5 years. So when you
Wow.
think of the fact that in the middle of a pandemic where, wow, real wow, when you think of the fact that in the middle of a pandemic, when a lot of economies are trying to just keep afloat and trying to facilitate economic activity and trying to achieve some sort of growth. These types of policies coming, particularly coming from the central bank, isn't one that's sending the right messages and seeking to actually achieve growth. And the truth of the matter is, there's no need to fear. There's no need to fear. Some jurisdictions, I mean, India and quite a few, have had a stance of banning cryptocurrencies just because they feel they cannot regulate the space. But I have to say that there are mechanisms to regulate the space. Not as
Wow.
easy as you would think, but it's possible to actually regulate the space, and a lot more progress, even amongst the more challenging aspects of the crypto asset industry, such as decentralized finance. We're seeing that regulation is coming out. And I also have to say, sorry, because I know you have a
Sure.
question to add here.
Yeah, sure.
I also have to say that even in the decentralized finance space, for example, right? There, you've got people there, and also decentralized applications, decentralized application promoters, who, in a certain way, actually want some sort of regulation, because this would further facilitate growth in that industry. It would create credibility for the industry. It would create clarity, I'd say, amongst people who want to actually engage in the space, but who, for the fear of violating regulation or for the fear of just not knowing what protection exists, won't get involved in it. So regulation is not a bad thing. It's just that regulators need to be able to strike the right balance, the right balance that does not stifle innovation, because this innovation facilitates financial inclusion. We want to
Yeah.
see people financially included. We want to see, poorer people being able, at least, to engage in economic activity. Right? We
Wow.
want to see small businesses growing. And so we don't want to stifle economic activity amongst these financially included, which constitutes the largest amount of the population, if you like, on African economies, and largest amount of types of small businesses that exist in Africa. So it's striking the right balance that doesn't stifle innovation, but at the same time doesn't facilitate, things like financial crime, doesn't promote, fraudulent activity, doesn't promote market manipulation, and things like that.
Wow. That is so good. We've got just about 2 minutes to wrap up, but I have a question for you. I know that I was just looking at the list of papers you've put out there, and it was a PhD exercise for me in itself to say, whoa, look at all of this. But the question I have for you is, what is next in terms of this whole fintech regulation area? In 2 minutes, if you can just tell us what your views are on that area.
Okay, so there's a whole new world happening now in the decentralized finance space, right? Which a lot of regulators would need a lot of catching up to do, right? So, like I said earlier, you've got a lot of financial transactions happening virtually now, whether it's borrowing, lending, investing, happening on a peer-to-peer basis. And I'll say regulation of that space is miles and years behind. So in terms of what is next in the fintech industry, I mean, there's so much going on in the payment space. There's just so much going on. My recent area of focus really is looking at decentralized finance, which I find particularly intriguing, and intriguing from the perspective that you have really literally a full-blown financial service or full-blown financial services and products happening virtually, and and people aren't aware of it. In fact, even regulators aren't aware of it. So I think on the regulatory landscape, a lot is being done in advanced markets. But I think for emerging, well, maybe also emerging markets, but I think for frontier markets and developing countries, a lot still needs to be done in coming to speed with regulation. There's no need banning and banning. These sorts of activities, you can't ban them 100%.
Yeah.
There a lot of them are occurring on open source type platforms. So even if you ban them, transactions will still be occurring.
Of course. Doctor, thank you so much for your time this evening. This has been so educative. I can see some comments here. Thank you so much. I'm sure that we're going to need to have you back because there is so much in this area that we just cannot cover in a 1 hour program. But I'm sure that we will get back to you again on this one, Doctor, and also to hear about that new area of research that you're working on as well. We would love to hear about that. But for tonight, thank you so much. And to our viewers across all the platforms, once again, just want to say thank you for joining us today. Thank you for being there today. We will definitely uh, be having, there's a program. Oh, I've almost forgot this. There's a program on Thursday. You don't want to miss that program on Thursday. And I would encourage you, please subscribe, like, whatever you need to do. We're looking at the Commonwealth and the relevance of the Commonwealth in modern civilization. And we're having Professor Bolaji Akinyemi, a former Minister of Foreign Affairs in Nigeria. He's going to be talking to us about that. That's on Thursday, same time, 7 p.m. And we're also going to have a virtual studio audience where you, our viewers, can be part of the program. You can put your questions directly to the professor. And I know that there are some other professors who have already indicated they'll be there. There's some, diplomats who have already indicated they'll be there. Let's find out about this structure called the Commonwealth. Is it a net benefit to Africa as a whole, or is it another channel, another relic of colonialization? And let's have a look at that on Thursday. But for this evening, thank you for joining us. See you next time.